Good afternoon. My name is John with the Pine Tree, and I have the great pleasure of being here with Cory Burnell. Now, we're in Valley Springs in Cory's office, and one of the neat things is financial services, but also with more of the local touch and local feel, right? Isn't that?
Yeah, for the last almost 5 years now.
5 years.
In
I think
this location, yeah.
we did one of these little interviews things when you were over across town and you were
That's
first
right.
getting.
That's right. Yeah. Well, previous to that, I'd been with Bank of Lodi,
Right.
and then when
Right.
Wells Fargo bought the bank, started my own practice in Valley
Yeah.
Springs.
Well, tell us a little bit about your business.
Pretty much a focus on investment management.
Okay.
That would be the specialty that I offer clients, and
Right.
but it's a full gamut of financial planning, retirement plans, and you've got some insurance needs that come up with clients from time to time. But principally, it's that asset management inside of IRAs, 401ks. I also do 401k plans for businesses, which is keeps you busy,
Yeah.
for sure.
Yeah. Now, a little bit on the market thing where we are now. I mean, we're just. Do you think we're back, so to speak? I mean, I think it's set some. The market's done well the last year.
Oh man, every time there's a market rally, it's in this economic environment, it's a little discomforting, because you're wondering, how is it we're rallying in this economic environment? But we're reminded that corporate profit margins have been at all-time records the last couple of years due to the cost-cutting measures that they put in place in 2008. So that's been wind in the sail
Yeah.
of in the sales of stocks, and really, the emerging markets economies have been growing so quickly that corporate profits. Keep in mind that most stocks now are multinationals,
Right.
so they're selling their
Right.
goods and services into economies that are growing quickly. But I would say that now at a 4-year high on the S&P 500 index, it should be time for investors to maybe be taking risk off the table a little
Now, a
bit.
question. You're talking about the emerging market stuff. That's really affecting even things that would be, like fuels, right? I mean, as far as
Yeah.
fuels and things like that, were
Significantly. I mean, the demand for energy and commodities is held up there because of
Right.
the rapidly growing emerging economies, and those populations continue to grow, particularly in India and Brazil.
yeah.
So a nice hedge for inflation is to have that exposure to energy and cyclicals or materials, more specifically, and which we do here in our client accounts.
Yeah.
We are overweight energy right now, and then some of the defensives like healthcare.
Right.
But yeah, those emerging economies, and one of the concerns would be whether a bubble's formed over in China at all with the real estate market, and
Right.
and how much can their economy slow down, and if it does, how much does it impact the rest of the world, and then of course
A
there's
question on the
headwinds
China
in Europe
thing. I
too.
mean, for example, I think that there's been some internally the investment market in China, isn't that? There's been some downward pressure. I mean, internally, right? Hadn't there, a lot of their maybe not outs. Everybody still sees the China roaring along on the outside, but internally there's kind of some cracks showing up.
Well, when I allude to their real estate market, I mean they have overbuilt. They actually have empty cities there,
Okay.
right? Now, one thing why that's not quite the type of real estate bubble we had here is that these things have been built with cash essentially, whereas we borrowed to build to overbuild, right? So when you break our bubble, you really had a pop. So China might not have the kind of pop that we had.
Right. Right.
However, I think what could lead to global slowdown, or at least hurt the United States a little bit in coming years, is that the rise of the middle class in China becomes more inwardly consumer-minded. Their consumerism can be a bit more inward-focused, and that may mean they're not quite so export-focused.
Right.
And so the depression, that trade relationship they have with us may become depressed as they instead consume things themselves. So we could see a situation where they then don't run trade surpluses, that they recycle those dollars back to us. It helps keep our interest rates low.
Right.
If that doesn't happen, our interest rates could go higher, and we have a significant economic problem here as a result. So yeah, there's a lot of things to be concerned about with the economic headwinds in Europe as well.
Yeah.
If you look at the valuation of the stock market, it's not fair to say it's necessarily overvalued. It may be fairly valued. However, it probably deserves a lower than historical normal valuation on it because of the economic headwinds that are out there.
Right.
So therefore, investors should be cautious at this point.
I guess let's get in a plug on you here before we finish up. Let's say it's somebody new to the county, new to the area. They're looking at moving some of their services and something, so to speak, here locally. What's your pitch? What would you tell them?
Yeah, I appreciate that, John. I'm a chartered financial analyst.
Okay.
Got the CFA designation. I'm the only one east of the 99, you might say.
Got it.
So when it comes to finding an investment manager in the foothills, someone who specializes in asset management, that's me
Okay.
as a CFA.
Right.
Sure, you can find other financial advisors, but quite frankly, they're busy doing other things and simply managing investments, which is what I'm doing each day. So if somebody is really concerned about their investments being managed by the highest level of expertise they can find in the area, that would be my pitch. That would be where I would fit in.
I think that's a good spot to end.
Yeah, thanks a lot.
Thank
buddy.
you. Thank you
All
for
right.
the information. Appreciate
You bet.
it. Thanks.